Welcome back. You're watching special Budget 21-22. I have a very special guest, Mr. Rashesh Shah, Sector Expert, Cement and Tourism, ICICI Direct. Welcome, Mr. Shah.
Yeah, hello.
Hi. How do you see the budget for cement sector?
See, overall, the budget is very positive as far as cement companies are concerned, and there has been a clear focus on the growth has been made via higher spending on infra. If you look at the capital expenditure profile of the government, then there has been sharp increase of about 34% compared to last year's FY21 budgeted capital expenditure. So this clearly reflects the government's priority towards infra. And overall, to fund more capex on the infra side, the government has also announced a bill to set up financial institutions. So overall, we see a very positive development for cement companies, and we expect the cement demand to remain buoyant going forward. And on the other side, interest rates are also quite in a favorable terms. So overall, real estate demand and infra demand supported by government will push the cement companies overall demand momentum, and will continue to prefer all the large cap players on the cement space.
With this focus on infrastructure and big boost to infrastructure, do you expect the cement companies now to enhance capacities?
Already, all major companies have announced cement capacities. If you see the Ultratech's latest announcement, then they are also increasing their capacity by almost 30 million tons, and few more companies are also going to announce their capacity addition plan. But overall, in the past 4-5 years, more of the consolidation has happened. So this is going to have a positive impact on the overall cement companies.
Anything for tourism sector in the budget, Mr. Shah?
See, although tourism has been hit hard due to this COVID pandemic, but no positive announcement has come on the tourism side. So we'll see what announcements can be made by the government. But in the budget, there is no specific announcement has been made for the hotel companies.
The markets are concerned, cement companies have been doing well. And we have seen a sharp move on these counters. So which one is the best bet for you now post-budget with so much of trust on infrastructure?
See, in the cement space, we continue to prefer Ultratech Cement, and our second pick remains Ramco Cement in the cement space. In the mid cap, we like JK Lakshmi and JK Cement.
Welcome back. Special coverage on Budget 21-22. I have with me a very special guest, Mr. Devang, expert. The budget be for the steel sector?
Good afternoon. The budget has been a mixed bag for the steel sector. On the positive side, focus towards infrastructure and construction sectors has augurs well for the steel sector, as will provide the necessary demand push. However, the steps taken towards revoking of ADD and CVD and reduction in basic custom duty uniformly to 7.5% for semis, flats and long products is negative for steel sector.
So how would you rate it? I mean, the steel has seen a good run-up in the markets in the last couple of months. Would this be a dent?
Right, ma'am. At the moment, the international prices are still at a premium to domestic prices, so we will not see any immediate push on the steel prices per se, and we expect good quarterly numbers in Q3 and Q4.
Lately, we have seen, Mr. Devang, that the prices have been on the rise for the steel sector. Now, do you expect the prices to stay at these levels only, or come down a bit because of the change in the structure?
See, basically the steel prices would be depending on how the Chinese prices move on the global side of it. At the moment, the global and Chinese prices are retaining their strength. So we expect these prices to continue for at least next 3 months.
Any of your bets in steel sector that you like the most?
Generally, we like the steel space as a whole.
Hello, everybody. Yeah, we expect market to trade with a positive bias as we have seen a sharp reversal after the 6 days of fall. As on expected lines, market has seen a good support at 13,500, 600 levels. And we expect market to head towards 14,900 in the coming days down the line. So near-term target for the Nifty may be 14,500, but overall we are expecting, I think, so Nifty to head towards 14,900 post-budget event. So we are overall positive for the market, and where we see that market in Nifty has maintained the rhythm of not correcting. If you look at the market since March 2020, the rally which has started from March, none of the corrective phase has lasted for more than 1 week, and the corrections have been in the span of 8 to 10%. If you look at the current corrective phase, which started from 13,700 to 14,700 to 13,600, has been in a span of 8%. So market exactly has gone corrective for 1 week, and almost a span of correction has been into 8 to 9%. We believe that going forward, overall outlook remains to be positive for the Nifty, and 14,900 is more likely target for the Nifty in the coming days down the line. Coming to the Bank Nifty, as Bank Nifty, if you look at the daily chart, the 5 days of fall, which started from 32,860 to 29,940, has got retraced in a single day. So when in technicals we take this as a faster retracement of the fall, which is a structural change happening in the Nifty. Bank Nifty. So we believe, I think so for Bank Nifty, we had a target of 34,900 to 35,000 in the days to come. So overall, we remain to be positive for Bank Nifty also. So any dip in Bank Nifty towards 3,300 to 33,100 should be looked as a buying opportunity. As far as mid caps and small caps are concerned, we remain to be positive for mid caps and small cap, because if you look at this current fall in last 6 days, they have clearly been resilient in their outperformance. So we believe, I think so, this outperformance for the mid caps and small caps should continue, and the days down the line we will see the catch up exercise where broader market should relatively outperform the benchmark. So overall we remain to be positive for the Nifty. The near term, I think the strong support for the Nifty has been 12,800, remains to 13,800 remains to be the very strong support for the Nifty, and a dip towards 14,000 to 13,800 should be back to look as a buying opportunity. As far as stocks and sectors are concerned, we remain to be positive for the sectors where we remain to be constructive positive are the banking, which we believe should be the hero for 2021. So banking as a sector looks positive. Apart from banking, we remain to be positive for infrastructure, consumption, other space, and manufacturing, where we can see a sharp uptick in the days to come. So in the banking, we remain to be positive for the private banks, where stocks like Axis, HDFC Bank, Kotak Bank remains to be a top pick in the banking space. In infra space, we believe, I think so, stocks like KNR Construction, PNC Infra, Ultratech, L&T, Supreme Industries are the stocks which one should be looking out for in the days to come. And on the manufacturing side, we believe, I think so, stocks like Amber Enterprise, Dixon remains to be on the positive side. So overall outlook for the market, I think so, remains to be the positive, and the sectors which we see a relatively outperformance down the line are the banking, infra, and manufacturing side. PSUs also remains to be our favorite, where we see a stock specific action likely to see uptick in the days to come, where stocks like Container Corporation is one which remains to be a top pick. Apart from Container Corporation, stocks like Bharat Electronics and Cochin Shipyard remains to be a top pick among the PSU space. That's all from my side. Thank you.
Overall, for the textile sector, I think the current budget has been really positive. From the perspective of what has come in the budget, the important thing is like there has been an announcement related to mega textile parks, which is probably should help the sector to become more globally competitive, boost employment generation, and also attract large investment. So that should help the overall capacity building for the Indian export players. And also there are announcements related to the retail sector. In the retail sector, the government has announced a rationalization of customs duty from 12.5% to 7.5%. This should help the gems and jewelry players probably by reducing the impact cost of gold. As per our calculations, we think the gold prices would come down by around 4 to 5%. Also, there has been an announcement related to kitchen appliances. The kitchen appliances segment
probably there has been an announcement of extension of the Pradhan Mantri Ujjwala Yojana, which is will be extended to 1 crore new beneficiaries. The earlier limit was around 8 crores, which has been already achieved. We think this will be positive for the entire kitchen appliances space and should help the listed kitchen appliances players in the market.
So FY22 union budget has been pretty good for the infra sector. Given the fact that the government has been growth focused, there has been increase in the capex spending for the infrastructure sector. So at the overall level, the capex at 5.54 lakh crore is being pegged at around 34.5% higher year-on-year basis. Now this transmits into a huge opportunity for all the players in the infrastructure sector. Now coming on to the specific sector, so we'll talk about the road sector, where we have the highest coverage in terms of the infrastructure companies. Now coming on to the road sector, the overall allocation for the road has been at 1.18 lakh crore, which is much higher than 1.02 lakh crore which was spent as per the revised estimate in FY21. Now we must understand that the ordering has been pretty low, but the government expects the rest of the 2 months to have around more than 8,000 kilometers of ordering. This means that there will be huge potential for the EPC companies under coverage. Interestingly, this was a budget where we saw not only the capex was being focused, there was also a focus on the financing of that capex. Now, on that front, what they have done is that the budget is looking to introduce a bill where they'll be setting up a DFI. Now, the government intends to provide a sum of 20,000 crore and give that a capitalization of up to 5 lakh crore of financing for the projects over the next 3 years. This, we believe, will be a huge alternate infrastructure financing mode. Coming on to the next part, the government is also keen on monetizing assets. Apart from the non-core ones, they are looking to monetize assets in the road, the grid assets, or the DFC and the airports of the tier 2, tier 3 towns. Now, these ensures that the financing gap will not be there for the infrastructure sector.